Okay, so this will be a short general market commentary. I'll be covering the top 10 pairs. So we're going to start off with US 10-year yields, move over to the 10-year bonds, then dollar index. I'm going to finish off with the stock index markets, FX, gold, and Bitcoin. So I'm going to start off with the US 10-year yields on a weekly time frame, and we've seen a bearish movement to the downside, filling in a few imbalances in price. We have a volume imbalance right here due to the fact that it's middle of the week and we've already seen a decline in price. Sell side taken, the bullish volume imbalance also being met, but the consequent encroachments of the new week opening gap has not been met yet. So I'm expecting a continuation to the downside, which will ultimately lead to dollar index following suit also. We'll get to that very shortly. So what I was expecting this week was an appreciation of price up to the 4.199% region. I was also having a look at that 4.218 to 4.186 region with the new week opening gap premium and discount at 4.258 to 4.232. We failed to get that. What we did see is a breach of buy side. So what I'm expecting is a continuation to the downside, which also goes with the same notion that I'm expecting downwards price action. So what does that mean for the 10-year T-Note futures market? So if we've already seen a drop to the downside, then you could expect the market for the 10-year treasury notes to go up. Now, where have we managed to reach up to? Well, if we zoom out for a moment and have a look at, just delete that for a moment. If we zoom out and have a look at the monthly time frame, you can see this premium wick, which I've labeled here, and I've added in the necessary encroachments. So you've got the 50% encroachment, consequent encroachment, nearly forgot that word now. Then you've also got the standard deviation points of that encroachment, and there's yet to see a candle body closure inside of this region. Now with 2 days left, and with the highs being at 11324.0 and the 75% region at 113.24.5, I do believe that we could see an appreciation to the upside, at least reaching that 113.30.5 region. But at the same time, due to the fact that we're in high resistance, it's very difficult to put a finger on exactly where the market's most likely to draw to. Because I'll be honest with you, at the beginning of this week, I never really had a set bias going into this week. And so far, because it's already Tuesday going into Wednesday and you've already seen an appreciation in price, you can expect this to continue to the upside. Alright, fill these imbalances and then potentially reverse. Let's not take away from the fact that the market has been in a bull market since the beginning of 2025. We've been in a bull market, but we've been trading inside of this 7th of April 2025 down close, bearish, engulfing candle. So if we see a rip above the 114.10.5 area, or we see a drop below the 109.08.0, then I'm expecting a lot of movement going forward in the future. On a daily time frame, 2 days worth of bullish appreciation with a balanced price range, so I'm not expecting the market to trade back down into this region here. I'm having a look at these highs right here. I'm having a look at the midpoint, and I'm also having a look at the consequent encroachment of the new week opening gap. Sorry, of the premium wick. This is the new week opening gap, and we've actually closed above this region. Alright, so this is giving me more confidence to say that if we do push to the upside, that could lead to dollar index dropping in price. Declining to where, you might ask? Now I've got a few short-term price draws in the cards, but at the same time it's not worthy of placing a trade. I'll be honest with you, because this is something that could play out between now and the Asian session close, which I will not be taking any part in. So I'm going to move over to dollar index, but on the monthly time frame, because I've been relying very heavily on this premium wick, although we've been on the bear market. Now what we have seen is that draw up to that 100.257 area. This is a region that I called from quite a few weeks ago. In fact, from when price action was around this area. When we made the low, I was expecting price action to rally up into this premium wick array, which we've seen, right? And we've seen a rejection. So right now, it's a very challenging decision to make from a monthly standpoint, because we've taken buy-side liquidity, two forms of buy-side liquidity. We've run up into that 25% standard deviation, and at the same time we've closed inside of that range between 0 and 25%. So going forward within the next few days, I mean, tomorrow we have the budget coming out that could induce a lot of liquidity into the market, which could allow dollar index to continue to rally to the upside, which would lead GDP USD to potentially sell off to where, you might ask? Well, I'm having a look at that 1.27358 mark. We'll get to that shortly. I'm going to cover the stock index markets first before I move over to Forex. So wrapping up with dollar index, on the monthly time frame, I don't really have a see, I don't want to say that I'm expecting the market to draw up into the higher forms of the premium array, but at the same time, due to the fact that we've taken out these lows, and yes, we did take out this high, there is a good chance where if we were looking to roll over, due to the fact that the market is already bearish, many people are expecting the market to continue down into this imbalance, down to this low, down to this 3-month inversion fair value gap. Let's have a look at that now. So this is the gap that I'm having a look at for price to draw down into. Due to the fact that we have not seen that, let's go back over to the monthly. That's leading me to believe that we can at least see, at least for this week, right, for the ending of the month, we can see a push up into that 100.816 region before we see a rollover. I could be wrong, but based on my studies, whenever I see movements like this, I tend not to push it. I tend not to push my edge, and I only aim for low-hanging fruits. So my version of low-hanging fruits would be that 100.816, which would in turn lead to the stock index markets, potentially, but definitely the Forex markets to sell off if we were to see an appreciation in price to the upside. When I make my way to the weekly time frame now, obviously it's high resistance, something that a lot of people do not like. Market's been bearish, it's had some time to accumulate positions within this area. This is what you'd deem as consolidation, due to the fact that the ranges are very tight, up, down, up, down, up, down, up, down, but there's no major movement to the upside or to the downside. We do have a fair value gap here, which has been respected with a bearish hammer candle on the weekly time frame, which is a massive candle. You know, if you really peel back the skin and you look at it from for what it is. Buy side taken, new week opening gap. Let's have a look at the price. 100.395, 100.424. So we have failed to meet the premium new week opening gap, but yet we have seen a decline in price this week. Hard to say, guys, but I want to see this right here. So between 99.399 to 99.139, I'd like to see that be used as a form of support due to the fact that we've already seen a bearish weekly hammer respecting this bullish buy side imbalance, sell side inefficiency before making its way to the upside. Yes, it did take the 3rd of November's high out, weekly high out, but it is yet to reach inside of this new week opening gap, which it has done so, but it was more of a fishing attempt. Failed to get up there, fishing attempt there. This was the beginning of the new week opening gap. This was the decline, but we're yet to see a rebalance up into this area here. So I've got my eyes set on that 100.424 to 106.89 price zone, which goes hand in hand with the US 10-year yields rallying from where we are at right now up into these inefficiencies in price. Volume imbalance there, volume imbalance there. This is on a weekly time frame, and going down to a daily, it's not as obvious, you know, because as you can see, it's been bearish since last Thursday. It's just been a continuation of falling price down into the 25% IPDA range at 3.996. This fair value gap is very important. This area that I've mapped out, let's make the charts a bit bigger. So this area that I've mapped out is a bullish order block, but we've failed to use that as support. So I'm expecting going forward for the rest of the week is for this buy side imbalance, sell side inefficiency, and also the midpoint, which is the consequent encroachment, or you could say the mean threshold of this order block. I'd like to see price close above this area going into tomorrow, Thursday and Friday, and I'd like to see it make its way back up above that 4.056 region, which would then give dollar index the leg room to rally up into this weekly sell side imbalance, buy side inefficiency. Now, with that being mentioned, let's move over to the stock index markets, the good old stock index markets. Okay, let's have a look at the weekly. Same thing for ES. Going into this week, I never really had a solid bias. My plan this week was to play the session ranges, due to the fact that yes, we have seen a spike below sell side liquidity. Yes, the weekly bullish order block has been tagged, and yes, this new week opening gap has also failed. I mean, you could argue and say it failed to hold a support, but where the closure of the week ended is close to the up close of the new week opening gap, which is actually strength, you know. So going forward, with a couple of days left to go this week and high impact news being released this week as well, let's just quickly go over it. So today we had PPI numbers from the US, hence the reason why we've seen a massive, I wouldn't say massive, but on the intraday it was a nice decent rally to the upside. Right, we had PPI numbers, and we also had consumer confidence and pending home sales. These were gold folders, to say the least. Tomorrow we have CPI numbers coming out from Australia. We also have the official cash rate coming out from New Zealand. There's a lot going on tomorrow, I'll be honest with you. There's a lot going on. We have unemployment rates, which is a big factor coming out tomorrow. Unemployment claims coming out at 1:30 p.m. and we have 3 medium folders. Alright, so all in total 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we have 13 high to medium impact news being released tomorrow, and with price being where it is at now, you can expect volatility to enter the marketplaces before the news occurs and after the news occurs. So I'm expecting a lot of movement to occur tomorrow, whether that's in the stock index markets or Forex. I'm expecting a lot of volatility. Whether we take these highs out, could argue and say that these are relative equal highs, due to the fact that if these 3 or 4 candles have been bearish on a continuous basis, the psychology behind going short would be, well, I'm going to see 3 weekly down close candles, and I'm going to place my stop loss above it. So where are you going to place your stop loss if we're bearish? Well, you're going to place your stop loss there, you're going to place your stop loss there, there, and there. So my methodology is to raid buy stops or to raid sell stops. So I'm going forward here is looking at this high here at 6,801. So far we've seen a rejection, well, I wouldn't say rejection, but we have closed inside of the new week opening gap from the 9th of November to the 7th of November. At the same time, this would be a perfect area for retail traders to go short. Hence the reason why I'm expecting a continuation up into this SIBI, sell side imbalance, buy side inefficiency, as well as these relative equal highs. I deem these two as relative equal highs due to the fact that it's very close to each other. The market has been in the bear market, and this would be an obvious place to place your stop loss. Right? Stop loss is there, has been tagged, but I don't think that's enough. I do think we're going to get a continued run or rally up into this SIBI. This liquidity void, this is a true liquidity void due to the fact that there was no trading done in this area. We did get a down close movement inside of this liquidity void, and we did get upwards movement inside of the liquidity void too. So if we were to fail inside of this sell side imbalance, buy side inefficiency, I'm looking for here, and you guys might be thinking, what the hell, legend? You're looking at 6,280? God, you must be crazy. I'm not. I'm just looking at price action and just letting you know exactly how things can go if we see this rejection in this region here, because I'm basing it on market structure. We got these lows that was taken there, stops swept, long-term high, intermediate term high, short-term high. So I'm looking for the short-term high to be taken, but the intermediate term high to be supported by price and by the algorithms, if you'd like to call it that. Right. So going forward tomorrow, I'm expecting a continuation to the upside, and yes, it is low-hanging fruits, but right now with the current conditions that we are facing, that is the best solution for me to take right now. So on the daily, I'm looking for an appreciation of price up to that 6,801.50 region, but ultimately I'm having a look at the 6,852 to 6,795.50. Now it's going to be very similar when we move over to Nasdaq, because when comparing Nasdaq to ES, you can see that this premium wick range has been completely filled in by ES. But then when we move over to NQ, you can clearly see that it's weaker, in a sense where we've rallied up into that premium wick. The highs, 25,135.25. The midpoint, 25,138. Alright, so the highs of yesterday's candle, or should I say today's candle, since it's not 12 o'clock yet, is lower than the 50% mark of the premium wick range, which doesn't really inspire me for any confidence, I'll be honest with you. But due to the fact that ES has over 500 stocks compared to Nasdaq's measly 100, and we're seeing ES stronger than Nasdaq, that gives me the confidence to say that if we see this rally above these relative equal highs into this SIBI, then you can also expect Nasdaq to follow suit. But instead of rallying into and above the 50% consequent encroachment of the premium gap or premium wick, I could expect a rally above the full premium range. So I'm looking at the 25,309.50 range, and I'm also studying for price to get up into the sell side imbalance, buy side inefficiency, very similar to ES in the sense we have a buy side imbalance, sell side inefficiency with a institutional order flow entry draw playing part, NQ, institutional order flow entry draw, relative equal highs, relative equal highs. So I'll be looking for the market to rally up into this gap here. So what I will be doing is I'll use a red rectangular tool, move it just like that, and that would be the setup for tomorrow. So I'm mainly going to be staying in the London ranges, so this is from 7 o'clock to 10 o'clock. Right, so ideally I'd like to see the market sell off before seeing a rally. I don't mind missing the rally, guys. Honestly, I don't mind missing the rally. But what I like to do is understand the bias of where the market is most likely to draw to. So have a good understanding of where to enter, where not to enter, and whether the move is going to be fake or not. So what I'm looking at here, once again, is I believe this is a midnight opening price, but I'll get to that very shortly. But yeah, what we're looking at here for Nasdaq is the weakness in comparison to ES, but then at the same time, due to the fact that there's not that much, you can call it liquidity in comparison to ES, NQ is more likely to run up into the 25291.50 to 25490.75 region. I mean, just to adjust it a bit, or to be accurate, it's 25293.25 to 25488.75. Let's have a look at YM. I'm going to skip NAS 100 due to the fact that it's pretty much a mirror. It's a I mean, it's a replica of the futures market. All it does is copy what the futures market does, but due to the fact that the brokerage owns this pair, they have their own internal liquidity, so they're able to manipulate longs and shorts on the lower time frame, which is evidently what actually happened to me this morning. You know, the trade played out perfectly. Stop was not hit, but it was hit. Why? Well, due to internal liquidity. The trade should have never been stopped out. Should have went directly to take profit, but you know, it's another day you learn about how the markets can fuck you around. You know, excuse the French. Well, it's the honest truth. You know. So I want to move over to YM. Dow Jones. Dow Jones is looking a bit rough. This premium array, which is very similar to the premium array that I've showed you guys in Nasdaq and in ES. Where is it? Right there. I just don't have a Fibonacci on the ES pair. But as you can see with Dow Jones, bear in mind, guys, Dow Jones only has 30 pairs in the index, so it has less liquidity than it does even with Nasdaq and S&P. But if you can see that within the 30 stocks within this index, we've seen a rally above the premium array, I have to start studying the inefficiencies above price, since you've got a nice juicy green candle body closure above this region. You could also argue and say that we've also filled in a previous area of inefficiency, which is the sell side imbalance, buy side inefficiency. But due to the fact that we've closed very far away from that area, I'm more inclined to look at this area there. So I'm looking at this new week opening gap. I haven't actually labeled it. I use dollar index. I'm calling Dow Jones dollar index now. I use Dow Jones as a barometer. So what I mean by that is, I don't trade this market, but I use it just like I do with dollar index and GDP USD, Euro USD. So I study the SMT divergences. So I want to see whether the highs for Dow Jones has been created in comparison to Nasdaq and ES. And what we've seen when comparing all three pairs is YM is on the strongest side of bullish price action in comparison to all three markets. YM comes first, ES comes second, and YM and NQ comes third. But then, as I mentioned before, it's only got 30 stocks which means that this could be very wild if it's a manipulation run to the upside. Aiming for low hanging fruits tomorrow. I'm looking out for that 47,387 to 47,712 draw liquidity. Very similar to what I was mentioning for Nasdaq, which I'm expecting a rally above this premium wick array. And then with ES, I'm looking at this sell side imbalance, buy side inefficiency. So all three markets goes hand in hand with the bullish delivery to the upside. Due to the fact that this premium range has already been fulfilled, I will be deleting it, and I'll be keeping my eyes glued on this inefficiency right there. I'll also be setting an alert just in case. I'll set it 1 tick or 1 point lower than the new week opening gap. I'm not going to really touch on the hourly perspectives. I don't think there's anything in the hour to really talk about, to be honest with you guys. It's just very choppy price action. Put it this way, price action is efficiently being delivered to the upside and to the downside, especially within these ranges there, these ranges there, and this is what you deem as a low resistance liquidity run, where price just goes, and it just does not give you no chance to enter. Right, the lows is not lower than the previous candle's low, but what we're seeing is a slowdown of price delivery to the upside, which means a weakening of the momentum to the upside. So what I start looking for right now is the inefficiencies inside of this low resistance liquidity run. And what I can see here is 1, 2, 3, buy side imbalance, sell side inefficiency. And it just so happens to be that these inefficiencies formed after the 20th of November 2025 buy side liquidity was broken. So if we're looking for a continued move to the upside, we do have a hourly inefficiency that price has met, but we have not revisited this area as of yet. Right, so going forward, I mean, I could go to sleep and wake up and price action could have already delivered, but what I'm expecting is a delivery to 47,327 to 47,426. If we do see a break above this area, then I'll be looking out for these relative equal highs right there. Right, so this relative equal high and the upper portion of the new week opening gap at 47,712. I gave you guys a little bonus there, so I really shouldn't be sharing the hourly time frame, but we move. So that's the stock index markets covered. I'm gonna leave out, as I mentioned before, NAS 100, and I'm also gonna leave out the micros because I mean it's the same thing. It's the same market movement, same market structure, especially on the higher time frames when you compare it to Nasdaq, the full contract Nasdaq. So I'm going to be skipping those two. I'm going to be moving over to the Forex pairs now. So I'm going to be covering GBP USD, Euro USD, and I'm going to also be relating these pairs to dollar index, because these three pairs, so GBP USD, Euro USD, and dollar index, man, they go hand in hand. There is no dollar index without no GBP USD. There is no GBP USD without dollar index. There's no Euro USD without dollar index. There's no dollar index without GBP USD. You guys get the grip. So, as mentioned before, when covering dollar index, I'm expecting a continuation up into this new week opening gap. But what does that mean? What does that equate to when we move over to GBP USD? So I'm going to start off with the weekly. Actually, let's start off with the monthly. I mean, there's only, what, 2 days left, but let's just go over this. So, bullish hammer. Bullish hammer after sell side was taken inside of a inefficiency, monthly inefficiency, which means that it holds a lot of weight. This is a buy side imbalance, sell side inefficiency. I would like to believe that price has supported this region due to the fact that the lows is 1.30102. The lows of the fair value gap is 1.30149. Alright, so we've traded a bit lower than this low than of the buy side imbalance, sell side inefficiency. but yet the candle body itself is above the imbalance. Now, if we were to close this way, all right, put it this way, we've got 2 days left before this candle closes, right? Now, let's just assume for a minute that today was the last day of the month. What would you be looking at? Because I know what I'd be looking at. It would be this sell side imbalance, buy side inefficiency right there. I mean, yes, you've got relative equal highs up there, but on a monthly time frame, and as a scalper, I like to be in and out, in and out, in and out, in and out, in and out. I'm not really putting too much attention on these highs as of yet. Why? I mean, you've got this premium wick right there. You've got the quadrants 25, 50, 75 that the market would have to deliver to and close above. But you also have this inefficiency right there. So as a scalper, aiming for low hanging fruits is probably the best way to get paid. This is what I want to look at. And on a monthly time frame, this is a massive range. Alright. So when I move over to the weekly time frame, I'm going to zoom in a bit. Just have a look at this. So this monthly buy side imbalance, sell side inefficiency, I've translated it over to the weekly time frame just to see and study how price action on the weekly time frame will behave. And as you can see, on the 3rd of November, we have a bullish weekly hammer candle filling in the full range of this imbalance and closing above the buy side imbalance, sell side inefficiency. What we have here is a premium wick array, and what you can see here, let me zoom in a bit more now. What you can see here is once the market traded down into the monthly buy side imbalance, sell side inefficiency, and filled this range, we closed above. The following week, we created a power of 3, sold off, rallied back up, and then rallied to the highs to 1.32102. This is something that I called numerous of times, right? So this movement to the upside is something that I got picture perfect after we saw that. I'll be honest with you guys, I was expecting a continuation to the upside. I was looking at that 1.32445, only just for the fact that Euro USD already delivered, you know. So I found that very strange, very weird how GDP USD was creating those high resistance within this range here. What we saw is another hammer. This is a bearish hammer. The bearish hammer respected the 3rd of November's bullish hammer, and this following week we maintained the lows and we took buy side liquidity out. Now the highs worth noting would be the 1.32158. Current highs 1.32142. So if we were to continue to the upside, I'm not only expecting these highs to be taken out, but I would also expect this fair value gap here to be filled. Alright, we're still trading beneath the consequent encroachment of the premium wick, right, which indicates weakness. But due to the fact that I'm expecting a short-term draw to the upside, to the new week opening gap premium and discount price at 100,689 to 100,424, when we have a look at GDP USD, I mean, GDP USD is a very tricky one due to the fact that the economy's in the sink. You know, we have the budget coming out. The numbers are astronomically, ridiculously bad. So what we could see is a spike where we fill this sell side imbalance, buy side inefficiency, and then we roll over. We can roll over to that 1.27358. Or we can potentially roll over to this new week opening gap before we continue lower. So far for the past 4 weeks we've been in consolidation. So it's very, very difficult to understand what the next drawn liquidity would be based on what we've seen here on the weekly. I want to have a look at the daily time frame. could see that we sold off into that monthly SIBI. We rallied from that monthly SIBI. We created a bearish hammer candle, trading down into this buy side imbalance, sell side inefficiency after there was a market structure shift. So that gives me a confidence that I can expect higher prices. But yeah, that was incorrect. And some? Oh yeah, my god. You can't get drunk off of one. How many glasses did you have? One? Maybe we have the second one.
Yeah, because you're talking to me and minding my business.
I didn't even know. I didn't see this time. The second one.
Are you talking to your phone? Yeah.
I'll do it tomorrow.
Sorry. I don't want to disturb you.
This one is what I'm doing is private anyways. This is only for people I send the links to. Yeah. So if I send the link to you, then you're gonna have access to this, but this is not for the general public.
It's so funny how you speak.
Really?
It sounds so professional.
I have no other choice but to. What do you think I'm gonna have to be roadman riding? Roadman
It
moving?
sounds like it's good.
Yeah, I have.
You're improving, I guess.
I don't think I'm not even there yet, you know.
But you're improving.
I think
It's bit by bit.
small. This is why I have to do this every single day. Every day.
But I can notice though, even though I don't understand the shit about what you're talking about, but
Yeah, I feel like I still got more room for growth, but slowly, day after day.
how many times am I gonna say you have to see yourself? Even if it's tiny.
Oh no.
Say
No, do you know what it is?
more.
No, do you know what it is? When you're doing something for so long every single day, it's very hard for you to see the progress on someone
Yeah, I'm
else.
seeing it.
Yeah. Like I think it's easier for you to tell than me, because it's like I'm doing the same thing all the time. But I know it's
cheering
so.
you up.
Hmm?
I'm cheering you up. But you should do yourself too. You know,
And to do more of it.
yeah. It's not just work, which is good, but
Sometimes just celebrate, enjoy the moment. You're right.
it is nice when you say it to yourself instead of someone else coming to say it to you.
Now, don't get me wrong. It's not to say I don't. I do.
That's
I don't do
enough
it enough.
lie.
No, trust me, I do. It's probably it
What
was probably
was the
bad
last
before.
time?
Yesterday.
No. Let me shut up your mouth.
Yesterday? Was it yesterday? No. Yeah, yesterday. It was yesterday. I can't even lie and tell you it was today. It was today, but I gave myself a pat on the back and told myself how proud I am of myself. You know the account that the link that you sent me for the funded account. So
Did you have a look?
I had a look at it. Amazing.
Really?
I'm gonna finish because I've already got one here. I'm just waiting for them. I've hit the target already. I'm waiting for them to send me. There we go. So I've passed this one. So they've already sent it. So I need to activate this account now. So because I've reached the goal finally, once I activate the account, I'm gonna do the same thing, make the same amount of money, but instead of me just passing and just activating it, I actually get that money.
Oh.
So obviously this is where I have to make sure I'm doing everything. I'm dotting my I's, crossing my T's. Everything has to be like picture perfect, because it's not only me doing it for myself, I want to do it for other people. So when I go out and do things on YouTube, I want to help the community.
Me and your community.
You're more than my community, baby girl.
Oh, don't say those things.
Actually, there's certain things I'll safeguard for the community that I wouldn't with you.
Oh.
But, yeah, ultimately, let's see. yeah, congratulations. Activate your 50k funded account now. So yeah, so that is sorted out. But the thing is, if I go and try the challenge, you know, the website that you shared it for me. If I was to go ahead and do that now, I'm not going to spend that much attention with this. So I want to finish this. When I say finish, there is no real finish really, but get the first payout, get that over and done with, get it into my account, then go with another company, you know. But based on what you sent me, it's pretty good. It's more money than this place, but the rules are better. I wouldn't mind paying more if the rules are more friendlier, put it that way. This one, I'm not gonna lie, they're strict as hell. Honestly, even me passing, it took me a minute to get a good grip. But
I
I
was
did.
thinking to do it with you though. That one,
Mhm.
the website.
If we did, listen, if we did it together,
I don't know, you teach me.
I'm gonna have to give you lesson one. Give me a day when when are you gonna come down? You come tomorrow, yeah? Are you gonna bring your suitcase and stay here until the 27th?
Until 27.
Yeah, until you move in. I'll give you your first lesson when you're nicely relaxed. You know what? When you settle down at home, let me give you a first lesson. First good lesson, 1 good hour. You want to go back to the basics, like I'm teaching like you don't know anything. And then we'll make our way from there, because right now I'm in a position where I know what I'm good at. I know my skill, but sometimes I push myself too much and I ruin it. You know, like I know what I'm good at, so much so that I'll be sharing signals with other people, and they'll get back to me weeks in advance. But bro, how did you know that? Wow, how did you made me money? You made me £600. You made me £200, £80. You know, and that's just me. Even with one of the mates that I'm talking to, he'll send me messages every now and again. Probably out of let's say 20 times I've told him something was gonna happen,
And it happened.
and I'm talking about for 3 months ago, three and a half months ago. Like we really started to talk properly. Out of those 20 times, 3 times I was probably wrong. I don't even want to say 4. I could count on my hands, put it that way. So much so that even he knows it. He'll message me and be like, "Oh, what's in stock? What's in stock, legend? I know you got something." Because even he's expected it now. He's made money on my calls. He's doing the same thing I'm doing. Even he passed his own account based on what I was doing. He passed. Obviously, I'm not the type of person to tell him, "Oh, you'll buy this, sell it." I'm not doing that. I don't do that. What I'll tell you is, listen, expect the price to go up this week, up to this region there. Then you do the work and then learn the specific strategies to get in the market and ride it up to that position.
Okay.
Because I'm not gonna lie, it's very stressful to actually go through the notion of giving specific orders, buy there, sell there. I'm not doing that no more. I'm not doing that shit no more. Because people don't listen. People they'll miss the entry, they wake up late,
Yeah.
and then they get back to me, "Oh, I lost money, it didn't work." But then I've made money.
Yeah.
I'm not doing that. I'm not doing that no more. So what's been working for me for the
You
whole
did that
year,
before?
I've done that before, yeah. Made pretty decent money on that as well. But yeah, now it's more, you have to put the work in. Just like me. If you have a similar skill set to me, you will be able to understand what I'm seeing, and because you understand what I'm seeing, you have the faith and belief that where the market's most likely to go, as I'm saying, you believe that too. But I'm not going to tell you to believe it. I'm going to tell you what I believe and where I'm looking for the market to go. And if you don't believe me,
You just give me
just
like
watch.
the idea. That's it.
If you don't believe me, just watch.
Yeah.
So what has happened is, at least one person, I remember this one guy, he didn't believe me at first. I told him to watch. Just watch. Then he messaged me back saying, "Oh, my uncle lost, my uncle put £10,000 and he's down like 2,000." I was like, "Listen, you owe me a drink now." Because we basically took a bet saying that, listen, if the market goes down, as I'm saying, you owe me a drink and food. If the market goes up, I'll get you drink and food. Plus anything else. Plus a pinky on top. I was that confident.
Yeah.
I was right. You know? So, yeah. Like I'm gone past the point.
You record every night.
Every night. It depends on what it depends on the day of the week and the month. So when it comes down to the end of the month, so we've only got 2 days left, I do a deep recording. I'm not gonna do that now because it's not the end of the month, but when it comes to the end of the month, like the final
Like
day,
30 then.
ideally, yeah. So when it gets to, so when it's
Sunday.
fuck's sake,
You're working. It has to be
I'm gonna have to do
Friday.
it on Friday. I have to. It's gonna have to be on Friday. But yeah, when it gets to Friday, I'm gonna do a proper deep review. It's probably gonna be like 4 hours recording, easy.
Wow.
It sounds long though, but it doesn't feel long at all. Because each one, if I'm gonna do each and every single one properly, each and every single pair,
But how many pairs are you working with?
10. But I'm only trading one.
Why
But
are you working
I
with
need
10 then?
because they all interlink with each other, and that's probably the reason why my strike rate is so high. Because they all see, many people don't understand, but they all have similarities that, with experience, you'd understand. Without experience, you're not gonna understand. You'd ask the same question you just asked me. Like, why the hell are you trading 10? Why are you looking at 10? I'm only looking at 10 because they all align with each other. Like, for example, the 10-year yields align with 10-year bonds. The bonds align with the dollar index, so the dollar market. The dollar market aligns with the stocks like Amazon, Facebook, whatever. This is the stock index, so it's a bunch of different stocks, 500 stocks in one index. And so let's say one stock has one price, and another stock has a different price, and another stock has a different price. Just imagine 500 stocks of different prices, but the price of all of them is averaged. So you have one price for all 500 stocks. That's basically what I'm looking at now. So this is the S&P 500. Very obvious pair. A lot of people know about it. It's one of the most obvious pairs around, you know, because it's the stock market, obviously. And then you've got Nasdaq, same thing. Forex, so GDP USD, so pound. We live here, so I feel like I have to. I hate this. I bloody hate Forex. I'll be honest with you. I've said this multiple times, and it's funny. I don't know why though. There's a bad name to it.
Bad name?
Yeah, well, before I even started to learn all of this, all I heard was Forex. But then I'd link Forex to scammers. There was a lot of scammers back then, and there's still scammers now. But it's not only that, as well as, I don't know, man. I just have I don't like it. There's just something about it that the characteristics in comparison to the stock index markets is something I don't like. And it's funny because the very same friend that I've been giving those 20 the 20 calls to is Forex. The very thing I don't like. The very thing. I don't even trade it, but yet he's managed to make money and I haven't. Since I don't trade it. You know? So it just goes to show that if you have a strategy, if you have a strategy, that works. Oh yeah.
I have to buy this thing again.
Which one?
Sorry for interrupting.
This one?
Yeah.
Do you want another one now?
No, I will buy it. Okay.
Is it already dead?
I think so.
Wait, how do you know?
Because it doesn't.
Try my one. That's my one. Do you feel a difference?
Yes, yeah. That one is like stuck. It's more difficult to. No? And I think the hole where you put the liquid is a bit open also. That's why it goes so fast.
You know when you replaced it with the new one, right? Was it the same? Was it the same as my one? Like, was it normal? I can't remember. Or was it still acting the same way?
I'm not sure if I was dark the liquid. And I think it's getting again.
Oh shit.
Yes, no?
You look how dark the liquid is. You have to compare it to see.
I don't know if I have to change the
actual thing.
Because it's been long though.
That's right.
It's been long already. Yeah, you can't see it though.
I leave this. I'm gonna check in the drawer. One minute. I'm gonna refill it up though. One, you know what? I'm gonna refill it up. I'm not gonna fill it up to the brim.
I would go to the shop, maybe. I don't know if they can change battery or something.
Possibly. I don't think it's a battery. I do. Which one do you want? This one or? This one, the one that you had before. This one. This one.
Sorry, Cam, I'm disturbing you now.
That's okay.
No, it's not okay.
It's good thing I'm nearly finished with this, anyways.
Did you finish already?
The thing. I've still got 1, 2, 3, 4. Shouldn't take that long though. Well, it's good to ask questions, anyways.
Yeah, I'm always asking if I don't understand.
Bad if you didn't, to be honest.
I think that's one of the reasons I'm speaking now, also. Like, properly.
Because you answer a lot of questions and
All
find
the
out.
time.
Yeah, you can't change that about yourself, baby girl. You can't change it, honestly.
I don't.
Don't change it for nobody.
Even if you are laughing me, I don't care. I would know.
Nah, that's how it's supposed to be, honestly. So I'm the same way. I'll ask you questions until you get bored, until you're tired, until you get fed up with me. I don't care. Because I know why I'm asking you the questions, you know? Yeah, it's a tiny bit of a difference. It's nice though. Right, so how to look at dollar index. Dollar index, and what was we looking at? GDP USD, or was we looking at Euro USD? I think we were looking at GDP USD. Okay. So GDP USD alongside the dollar index, and what I'm having a look at here is what is the chances that you could see dollar index follow suit with US 10-year yields. I mean, we've got 1, 2, 3, 4 consecutive bearish days for US 10-year yields, but we've also, well, we haven't actually got 4 consecutive bearish days for dollar index. It's in a sticky position, I'll be honest. Buy side taken. Buy side imbalance, sell side inefficiency. The market is trading inside of this area. The lows 99,654. The lows 99,661. You see, on the weekly, I'm expecting it to drop into this area, right? But in the daily, it's very, very, very difficult right now because, yes, it did support this buy side imbalance, sell side inefficiency, and yes, I can say that there is a higher probability for us to move up into this new day opening gap, but that's not efficient. That's not sufficient enough. I mean, I could wake up and that move is already going to be done. So, although I'm looking at this area in price, I don't think this is an area that I'll be able to take advantage of once I wake up. So I'm looking at this order block right there. We have not tagged the order block. The order block's at 99.591. The opening is at 99.516. The lows, the current daily low is at 99.654. So based on how the candle delivered today, I do expect the market to continue down into this order block, and it doesn't mean it's going to be bearish. Yes, we've created the highs. Yes, we have a bullish market structure. We have a higher high, higher low, higher high, but it doesn't mean that we're going to see these higher lows taken out, right? It doesn't mean so. I mean, it could, because we are in a very challenging range, so to speak. You know, for the past couple of days, since Thursday, we've been consolidating above the new day opening gap, but underneath the new week opening gap premium market. So this is what I would deem as no man's land. I would stay far away from the markets if I see things like this. In fact, this recording is being released obviously on a Tuesday, right? But let's assume this recording was done on a Sunday night, Saturday night, or even a Friday after the market closed, and I saw this. My bias going forward would have been a drawdown into this buy side imbalance, sell side inefficiency. I mean, it's easier for me to say that now since the recording is being done now and the price action has already been booked. But I mean, it's pretty obvious due to the fact that we've seen a break, well, a continuation of market structure to the upside with that tiny wick right there, right? But then Monday opened and we failed to get the lows taken out. So this is an inside day with an obvious inefficiency, with an obvious fair volume imbalance. So I think the market to drop down into this region here is very reasonable. But now that it's happened, I'm willing to sit on my hands. Obviously, you guys already know what my longer term draw, which is the 100,424, 100,689 region. Moving over to GDP USD, what that could mean is an appreciation up to that 1.32410 region. I was calling this region when Euro USD ran up into this new week opening gap. Once I saw that, and this was what, a week ago? Oh, let me see. This was 2 weeks ago. 2 weeks ago, I had so much confidence in this rally, which did play out. But then I also had the confidence in GDP USD to rally up into this equilibrium, and we failed to get that. We didn't even get the SIBI bounce, SIBI retracement. So due to the fact that we are very close to that SIBI retracement and that 50% IPDA range at 1.32410, I am inclined to expect a continuation to the upside due to the fact that we've seen a market structure shift, fair value gap filled, hammer. Let's have a look at the low. 1.30386, 1.30380. So this low is lower than this low. So this is a 3-pin pattern. 3-pin pattern inside of a buy side imbalance, sell side inefficiency on a daily time frame, inside of a monthly buy side imbalance, sell side inefficiency, whilst it's above the upper portion of the monthly buy side imbalance, sell side inefficiency, whilst it's also above the 25% IPDA range. That's a lot of confidences for me to take to say that, listen, on a higher time frame, I can't set a date. I can't say today because even today is looking a bit sticky, but over, I'd even say this week, we're going to see that run up into that 1.32410 region, which goes hand in hand with dollars drop down into this weekly. Let's go back over to the weekly to have a look. This weekly buy side imbalance, sell side inefficiency, but most importantly the upper portion of the order block, which I mentioned at 99,628. That 99,628, it's around there. It's around that region there. On a daily, it's a bit further down that I'm expecting the market to deliver to. There is no imbalances apart from this one here. So yeah, it's a low-hanging fruit, but I do believe that this could be enough for GDP USD to rally to the upside. I am still looking for that delivery. Even though the last 2 weeks I was looking for an upwards delivery and we failed to get that, the market still hasn't changed market structure, because you had a shift right there, gap filled, order block filled, upper portion of the monthly, which is a higher time frame PDA filled, 20-day IPDA range, 25% range booked, price above. Monday, Tuesday, Wednesday, so Monday we stayed above, Tuesday we rallied and closed above buy side liquidity, daily buy side liquidity. Last week's low is on Friday. Alright, the previous high for last week has already been poached. It's already been taken, guys. We have a volume imbalance right there, or should you say a new week opening gap right there. The market has failed to close above that region, but we did get a closure inside with yesterday's price action. It's 12 o'clock at the moment, so I could comfortably say yesterday's price action. It's just that the candle starts to print as Asian session starts to print price at 12 o'clock, at 18 o'clock. So yeah, I'm having a look at that. I'm going to be placing a alert right there, see how that goes. Euro USD. Okay, so let's do a bit of tidying up here. Alright, so let's do the same thing we done with GDP USD. So having a look at the monthly time frame. Right. Put yourself. I'm gonna put you that much. Put you half a glass. So, in a monthly time frame, man, it is rough. Monthly is looking rough. I mean, let's break this down candle by candle. So, this month's candle with 2 days left. Bearing in mind that, let's assume that this candle's already closed because a lot of the price action has already been done within this upper and lower range. What have we done so far this month? Well, previous month's low taken. August low still intact. What's below? Discount PD array. We also have a buy side imbalance, sell side inefficiency. We also have a bullish order block. Buy side swept. Candle bodies closed inside of the range. So the candle that closed on the 2nd of June, on the month, well, June's candle, should I say, June's low, June's high, price action has managed to stay inside of this region there. So this is consolidation at its peak. Forget the wicks for a moment, just the candle bodies. Studying the candle body, you can see that it's been up, down, up, down, up, down. It's nothing really going on right now. Well, I mean, it hasn't really been going on since June. You know, so if you're making money within Euro USD, man, you gotta pat yourself on the back because it's very challenging market conditions, you know. Very, very, very challenging. In the longer term scheme of things, this imbalance in price is something that I have my eyes out on. This would mean that for dollar index, we're going to see a rally above this SIBI, weekly SIBI, and up into this premium wick. But I just want to aim for one thing at a time, so I don't want to get too, you know, comfortable with expecting the market to draw that far up in price. But when we drop down to the weekly time frame, bearing in mind that we've seen a buy side liquidity being taken out, sell side still intact, still trading inside of June's price action. Then looking at the weekly, you can see how efficient price has been delivered whilst inside of June's price range. A lot going on there. You have a shooting star, candle bodies closing beneath the 2021 sell side imbalance, buy side inefficiency. We have this discount wick, which has respected price of this hammer candle on a weekly time frame. 1.14899 was a draw on liquidity going. This was about a month ago. I was looking for this draw. I'll be honest with you, we did get this. We failed to get another touch of that 1.148899. And guys, there is no efficiency to the upside. When looking at efficiencies to the downside, there is one right there. But then for me, I don't think it's reasonable for me to expect within the next 2 days for the market to drop down into this region there. That's a decline from current market price to sell side imbalance, buy side inefficiency of 2.6 to 3.6%. I'm not really favoring that right now. What I am looking out for on a weekly time frame is for this bullish hammer candle to support price. I repeat, I do not want to see the candle body close beneath this low, which is at 1.14686. I'm expecting the market to gravitate higher, taking out these lows, right, and make its way above this discount wick. Right, so let's move over to the daily time frame. Alright, so this is a buy side imbalance, sell side inefficiency, which the market dropped down into at the beginning of November. Multiple bearish days. We traded down into the lower portions of the buy side imbalance, sell side inefficiency before seeing a relief rally to the upside. Now this relief rally failed to take the previous high out. The previous high was at the 0.75% range, but I wouldn't have known that if this low wasn't booked. So when this low was booked with a bullish hammer taking out sell side inside of the lower portion of the buy side imbalance, sell side inefficiency, then this range would be possible for me to create. So once I see that, then I'm looking for the swing to the upside. First point of interest would be any inefficiencies from the downside, so one there, and yeah, that's the only one to look at. I'd look at this premium wick array, and I'd also have a look at this new week opening gap. And the logic that I'm using to explain this IPD array from swing high to swing low is exactly the reason why the prediction to 1.15985 was spot on. I just didn't get it spot on with GDP USD, and the reason for that is because I expected both markets to move in tandem with each other, and they didn't. Euro USD did, and GDP USD didn't. You know, Euro USD actually moved better than I expected, you know, to say the least. So very similar to this buy side imbalance, sell side inefficiency. We have one right there. Candle filled, wick caused damage. We have a spinning top, bearish hammer, candle right there, which is a spinning top, relative equal highs taken. SIBI met, but that inefficiency, the market failed to close above the SIBI. See, with Euro it's a bit trickier because we've already seen the delivery of that 0.5 region. So for me to see that delivery one more time, even though there is no inefficiency, there's it's like trying to aim for a target in the dark. I'm trying to get bullseye. So on a daily time frame, I'm gonna have to be neutral. I'm gonna have to be neutral. I have no idea where we're gonna go short term, but when we look at it from a weekly perspective, even on the weekly, I think I'm stretching. Really and truly, I should be neutral. This is something I shouldn't even be touching with a long stick. I'll be honest with you. This is terrible. All inefficiencies has been booked. There's nothing apart from buy side, premium array, buy side that's already been filled. It's just, yeah. If I was trading Euro, I'd leave it for the whole week because I wouldn't trust. I wouldn't put any trust in this at all. You know, having a look at the intraday time frame, so the hourly time frame, you can see that the market has been gravitating to the upside throughout this week. Imbalances haven't really been left in the wake. We have an order block right there, but that order block was no way. Lows 1.15500, highs 1. Oh, you can't make that up. And this is Forex we're talking about. Look at the accuracy. And people say that the markets is random. Look at this. So this is the upper portion of the order block, and we're talking about euro, the very pair that I'm not looking to investigate any further in this week. So this is the order block, right? Changing the state of market delivery. We get the break, you get the rally to the upside, we get the drop, and look exactly where we drop to. And remember guys, Forex is known for manipulating price around. So for us to get the exact pip or the exact tick number, 1.15500, 1.15500 is crazy. That just shows the algorithm in work. So once we've got that tag of the order block, we rallied, we took buy side liquidity out, and we sold back down. I don't believe that this is the high. I am not in the belief that the highs has already been created. So although I did say that I'm not looking out for that 1.15985 region on an intraday perspective, I think that's still possible. I wouldn't trade on it and I wouldn't bet on it. Making that very clear, I would not do so. But big but, if we were to open tomorrow, right, London session, and we were already selling off during the Asian session, and then we created a market structure shift again, taking out these lows and then rallying higher, then I'll be looking at this range here. But as I said, I will not be trading it. I'll just place an alert to see how the bias plays out, and I'm going to leave it like that. Euro is dead to me this week. I have more conviction in GDP USD than I do with Euro. But I'm going to wrap up the Forex pairs now. I'm going to move over to the precious metals market. So let's have a look at gold. Gold, man, I timed the top perfectly. Sold right there at the top, right there. And ever since then, we've been in a consolidative state where we've seen last week Friday create a bearish hammer candle. The candle closed in the upper portion of the buy side imbalance, sell side inefficiency. And even though we're still in consolidation, there is a chance for us to rally and take out the 52.46815 high. Just call it 40, just call it 52.4647. You know, round it up to the closest number, closest whole number. Whenever I see a candle or a signature like this, especially when there's an inefficiency below, which you have the new week opening gap, that sets up the stage for a rally to the upside, especially on the intraday time frames. I'm only going to be covering the weekly and daily for silver. So I mean, if you have a look at the weekly, we failed to break the highs. We've got 2 days left, and the way it's looking is, I mean, it's possible for us to roll over from here, but I wouldn't like to place any faith in a raging bull market, man. It's been ripping since God knows when. We have a buy side imbalance, sell side inefficiency right there. As I said, I'm not going to put any faith in that since the market is already bullish. It's already been trading to the upside for quite some time now. So on the week, I mean, you have a shooting star there. The market has supported this upper portion of the fair value gap. This premium wick has been supported by price action. If I said fair value gap, that was my mistake there. We have another shooting star inside of another shooting star. So does this indicate weakness? Because once upon a time this candle was green. Once upon a time this candle was green. Once upon a time this candle was green. You know, so although we have this bullish hammer candle supporting this buy side imbalance, sell side inefficiency, as well as this area here, does that mean that these drives to the upside is all it's going to take for the market to sell off? I mean, it's possible. That is possible. I wouldn't like to place any faith behind that. Let's have a look at XAU. Sorry. GC. Let's have a look at the futures version. When we have a look at gold, so before we was having a look at silver, having a look at gold now, we rallied from this low up to this high, and ever since then we've been trading within a very tight range. within the 0.5 and 0.25 IPDA range after meeting the sell side imbalance, buy side inefficiency. So I want to study this down close candle, as this is the potential order block that the market could rally from. Right, you've seen the market tag it multiple times, 4.018, the lows 4.018.1. Right, these two lows also met down close candle, the bullish order block. So with the fact that the bullish order block is in play and we're starting to see a bullish buy program, I can expect the market to rally up into this buy side imbalance, sell side inefficiency, and beyond. I'd like to see the market break above this region and make its way up to that 4,274.5 mark. So I'm going to be setting an alert right there, another one right there, and another one not too close from terminus. And that will be it for the precious metals market. And last but not least, I'll make my way over to Bitcoin. Bitcoin. The lowest call I made for Bitcoin was 100k, and I mean, I guess it overshot 100k, so maybe I was too right. I mean, if you held your trade from the time I called it all the way back in that 117, 116 mark, oh my god, you'd be a millionaire, man. You'd be on the private jets, the private yachts, for all the bottles and everything you'd ever want, ever dream of. But nah, let me stop with the hopium anyways. So dollar index on everything's dollar index today, isn't it? So monthly Bitcoin decline of 20%. When you have a look at this order block, we can see that the market traded down into that 25% order block. Starting to see some sort of rejection from this order block. And also, it tends to follow the stock index markets as well. And this is the one thing I like about Bitcoin, even though I don't trade it. Sometimes whenever you see a move like this occur, but then it has not occurred yet in the stock index markets, you can put your money on the fact that sooner or later, that very same move is going to play out. And as you can see, I mean, ES is reversing, NQ is reversing, YM is also reversing, but at the same time, the movement to the downside, right, on a monthly time frame, let's go over to a weekly time frame. The movement on a weekly time frame is so dramatic that 8 times out of 10, ES, NQ, and YM will follow suit. We have a buy side imbalance, sell side inefficiency that the market is respecting at the moment. The bearish candle that sold off all the way down to that 80,524 mark has actually managed to close inside of that weekly busy area, which is great. We have these two order blocks that the market is also respecting. It's below that 50% mean threshold. So it's given me all the confidence to say that the market has a good chance of having a relief rally up into the upper portion of this weekly SIBI, potentially even getting up into this area there before selling off. Alright, and I'm talking about anything below that 100k mark, because we have highs taken, stops poached, stops poached one more time, stops taken, stops intact, imbalance supported. So when moving over to the daily time frame now, this is where the rubber meets the road. Bearish hammer candle closed above the 25% quadrant. Next candle failed to meet the midpoint. Next candle, SIBI met. Next candle, candle body SIBI met. Next candle, inside day, which was yesterday. Today I'm expecting 90.498 to deliver, assuming that Nasdaq, ES, and YM are looking to rip to the upside, which, I mean, it's already starting. Man, I haven't even ended the recording and it's already started. So as I mentioned for NQ, I'm looking for a rally above this area there. ES, I'm looking for a rally above relative equal highs, which it looks like in a couple of hours, if not minutes, this could play out. I'm going to place an alert there. And back to Bitcoin, yeah, you could expect it to rally, close and rally above this sell side imbalance, buy side inefficiency, and relative equal highs into this imbalance in price here. And that's a short-term draw going into the ending of this week. So with that being said, I've covered all 10 pairs. Should I say I've covered actually 11 pairs, because I covered silver with that as well. So I will be doing another review at the end of the month. So ideally on Friday, due to the fact that Sunday I will not be able to do it. I'll be observing price action to see any difference in what I was expecting and what actually happened. So I'm gonna leave ES price chart, since it's much cleaner and it weighs heavier than all the rest of the stock index pairs. So with that being said, I will be back soon.